So Bitcoin suffered a huge price crash earlier on Thursday, having missed record highs by a narrow margin earlier this week. The top cryptocurrency by market value fell from over $19,300 to $16,327 during the early European trading hours. It was last seen trading near $17,200, representing a 10% drop on a 24-hour basis, which definitely is something you should concern about. In this video, we will go through the three main reasons for this to happen and exactly what's best to do now. Stay tuned for our Bitcoin analysis in the end, in which we'll be giving you a detailed prospect on the future of Bitcoin. But before we start, please consider subscribing, as videos like this take a lot of time and effort to research and make. That little click on the subscribe button is literally the best reward for us. Thank you very much, and let's continue with the video. So the sudden fall caught many traders off guard, given the cryptocurrency was trading just 2% short of its record high of $19,783 on Wednesday. Bitcoin suffered a price crash earlier on Thursday, having missed record highs by a narrow margin earlier this week. But what's behind the $3,000 decline? Here are three of the primary factors responsible for the price drop before we give you the analysis at the end. Number 1. Excess leverage. So Bitcoin has fallen victim to a large unwinding of leverage trades in derivatives listed across major exchanges. Nearly $2 billion worth of derivative positions have been liquidated in the past 24 hours. Of that, more than $1.6 billion worth has been closed in the past 12 hours, according to data source Bybit. The unwinding of leverage trades had been expected, as the cost of holding long positions in the perpetual futures market, also known as the funding rate, had risen sharply to a multi-month high of 0.098% in the past few days. A sign of over-leveraging or overheating in the market. The funding rate is decided and paid every 8 hours. With the price drop, the funding rate has fallen back to 0.011%, according to data source Glassnode. In effect, excess leverage has been crowded out. Factor number 2. Technical pullback. So Bitcoin's rally from $10,000 to $19,400 seen over the past 7 weeks looked overstretched on the technical charts. The momentum was so strong that the cryptocurrency consistently traded above its 10-day moving average throughout the ascent, despite an overbought reading on the 14-day relative strength index. Assets seldom see a 90-degree rally, as speculators tend to book profits at regular intervals, pushing prices down to their short-term moving averages. The cryptocurrency has seen several pullbacks of 20% or more during the previous bull markets. The price drop seen today has taken the cryptocurrency well below its 10-day average and allowed the RSI to realign in a more bull-friendly manner. It's a healthy pullback, Stack Funds Dib said. According to chart analysts, price rallies with regular pullbacks are more sustainable than the near 90-degree ascents. Some traders had positioned for the pullback by buying put options or bearish bets, as noted by Deribit Insights. Reason number 3. Other factors amplified sell-off. So before we come to the detailed outlook on Bitcoin's future and answer the question of what to do now, there are some other factors we really want to mention here. If you want to go straight to the analysis, you can do this on the YouTube timeline below. But according to trader and analyst Alex Kruger, Brian Armstrong's tweet thread about the U.S. Treasury Department's rumored plans to track owners of self-hosted cryptocurrency wallets also weakened the bullish move, allowing a price pullback. This regulatory concerns, against a backdrop of euphoria and unsustainable high leverage among longs, led to the largest 24-hour drop since March, Kruger told in a Telegram chat. However, if what Armstrong talked about comes to be, it would be extremely bearish. As of now, I see that as highly unlikely in the short term, Kruger said. The downward move may also have been amplified by prominent cryptocurrency exchange OKEX's announcement it would resume withdrawals. Most of the frozen Bitcoin on OKEX had traded up around 70%, so there were a lot of unrealized profits locked up there, Sui Chung, CEO of CF Benchmarks, said in a statement. Once these coins were free to move, it's likely many traders sold them for dollars and stablecoins to realize those gains, adding greater momentum to the selling. Bitcoin had already fallen to around $17,600 when the exchange lifted the suspension at 8 o'clock UTC today and fell to $16,350 in the following hour. OKEX suspended withdrawals on October 16 when Bitcoin traded near $11,500. With that being said, let's come to the analysis of Bitcoin and answer the question of this video. Is Bitcoin still bullish? Well, the path of least resistance for Bitcoin remains on the higher side. The latest price drop is a noise against the larger bullish trend, Kruger said. Indeed, bullish macro factors such as increased institutional participation, record money printing by central banks, and the search for yield remain intact despite the price drop. Holding sentiment remains strong on Thursday, with the number of coins held on cryptocurrency exchanges at 2,384,913, the lowest level since August 2018. The data suggests investors view the current drop as a bull market pullback and remain confident about the cryptocurrency's long-term prospects. The metric has declined by over 17% this year, meaning there's been a liquidity drop in the market. Lastly, today's price plunge has cleared out the excessive leverage, as noted above. With the cost of holding long positions normalized, Bitcoin can now chart a more sustained rally to record highs. Crypto brokers Huser expects the cryptocurrency to consolidate in the range of $17,500 to $19,000 in the short term before resuming its uptrend. Bitcoin is yet to peak, said Siddharth Menon, co-founder and COO of Mumbai-based Wazirx exchange. We're also seeing a lot of pro traders take positions in Bitcoin. These are healthy positions because they are not going all in, but adding funds when it goes up or down. Alright, this is it for today's video. If you like this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. It really means the world to us. Thank you very much and see you next time.